Welcome back to Investing with Confidence, sponsored by Online Trading Academy. An online trading academy on their 25th year, teaching people just like you how to trade and invest in the stock market, how to make smart investing decisions in your income accounts, but also in your retirement accounts, whether they're 401k or IRA. And if you happen to miss 2 tickets to that investing class right here in Bloomington, call 888-682-6466. That's 888-682-6466 for 2 tickets for that class. Also, you're going to receive some stock ideas in a quick start kit that'll help you get started right away. Now, Al, mentioning the 401ks and IRAs, I want to talk about some retirement strategies. Just retirement strategies, whether you have a 401k with a company-sponsored, company-sponsored plan, or an IRA. But we have a lot of people that are a little bit anxious right now because of what the market is actually doing. And we kind of kicked the show off, big moves in the markets. And it's really coming off that supply zone, which is potential institutional sellers in the market, which potentially could keep pushing this market down. But when you have retirement plans, that's not good for a lot of people because they're probably in just a up strategy, one directional strategy, which is up. So how do you help people be confident going into retirement, but also preparing for retirement before that actually happens?
Yeah, and I think what we're seeing right now is a kind of a sense of false security or complacency by people because they've seen their 401ks and 403bs, the value go up from 2009 and until now. So there's kind of this, well, everything is going to be fine attitude. But we're seeing now the market is starting to pull back. And I read something the other day. This was a report by the Employee Benefit Research Institute. And what they're talking about is how many people are actually going to run out of money in retirement. And I know a lot of people listening are thinking, well, that won't happen to me. That's people that are just maybe have putting very little money into their retirement accounts. Well, here their bottom line was that almost 1 in 10 of the very richest people in the country are going to run out of money in retirement.
And that's the richest.
The richest people in this country. And I can tell you, I spent some time down in Naples, Florida back in the early 2000s when we went through that recession. And I can tell you there were a lot of homes that are in the, the $10 to $20 million range that were being fire saled on the market because people that were in those homes, the value of their portfolios was based on the markets, the stock market. And, I mean, it was a devastating time period. And to think that can't happen again is not being very realistic. I mean, I don't mean to scare people, but what I'm saying is this is a great time for you to learn how to better manage your retirement accounts, how to make sure that your retirement dollars stay with you. In other words, how do you protect what you have? And then how do you continue to grow it when the market isn't going up? How do you generate that what has now lost to you when you retire, and that's your income? How do you replace that? How do you keep paying the bills and the cost of living that you're going to incur? Well, those are things that we talk about in these classes. This is a critical time, I believe, for people to really understand how to take more control over their retirement accounts. My guess is that, and this is kind of sad, but my guess is that the majority of the people that have retirement accounts aren't even sure what's in their retirement accounts.
That's true.
And it's pretty hard to, achieve the full potential of what you could have if you don't even know what you have or what's available and maybe how to better manage that. So
just think about that for a second. I want that to sink in with our listeners because you mentioned, people think it's just going to be okay. Or they say, oh, well, that's life. Take charge now. That way you're not in that position when you want to live those golden years, have the good times of your life and being able to do the traveling that you want to do or, see the grandkids, make sure you drop them off after a couple hours back to the parents. You know how that goes, right? Mm-hmm. So it's just, when you have strategies that are designed for up and down markets, hopefully you're going into retirement comfortably, but also confidently. And that's what it all comes down to is getting into retirement and really having the fun that you want to have. And it takes a little bit of action to get started. Sometimes, people say, oh, why would I want to manage my whole money, my whole bucket of money? Well, think about this. You're giving your money, your whole bucket of money to a stranger.
That's correct.
To dictate when you retire. They're going to tell you all these great things, warm and fuzzy things that's going to make you feel really good, like you're on track. And then guess what? Kaboom, the market potentially goes down. Well, don't worry about that. Have a strategy and a plan before any of that happens. That way you're not at mercy to your broker, not at mercy to the market. You do what the market tells you to do. If you want to learn more about how to make smarter investment strategies within your retirement accounts, 401ks, IRAs, Al teaches investing classes right here in Bloomington, talks about how these markets work, how you can make smart investing decisions even if you have a company-sponsored plan. You might have more access to that than you actually think. So call 888-682-6466 for tickets for this investing class right here in Bloomington, local feel, hands-on. You can receive a financial quick start kit just for attending, which includes some free stock picks. So on this topic of 401k and IRA, Al, how does somebody actually, make those decisions? It's called self-directing, but if someone has an old 401k or maybe just an IRA that's sitting with a company, how does somebody actually move that money, and is that good because you can lower fees or eliminate them? It's all about keeping more of your money, isn't it?
Yes.
Well, that was one too many yeses.
Well, okay, then subtract one yes.
There you go.
But no, you can self-direct your assets, and it's easy to do. And basically, right now, if you have an employer-sponsored retirement plan, you're probably already directing the management of those assets, because who's giving you advice? Who's giving you help? Really, nobody. They're just taking your money in fees on a regular basis. And by the way, over the course of your working years, those fees, just the fees taken out for management of those assets by maybe a mutual fund manager and the fees that the broker charges, the plan sponsor charges, could cost you 50 to 75% of what you could have.
So think about that. If somebody has, let's just say, $250,000, the potential of what they could have is, what do you say, 50% more?
Yeah, you're losing 50 to 75% of what you could have.
So that's the difference of having maybe $250,000 or maybe $500,000. That's a big difference.
Oh, it's huge. And here's the other thing: when you retire and you start drawing money out of your retirement account to live, a lot of advisors use what we call the 4% rule, where you take 4% of your retirement account every year, and you'll be fine. Well, think about this: when you're taking that 4% out every year, who else is taking 4% out of your accounts? It's the fund manager, the plan sponsor.
So that hand is in the cookie jar.
The hand's still in the cookie jar, and now it's even bigger. So you're actually sharing that money, not only, and then the other thing is you're going to pay taxes on it. So you're sharing it with the government. You're also sharing it with the 401k sponsors.
So think about that for a second, though. If you have X amount of dollars, just say $100,000, and you said 4% is coming out. Say an investor takes out 4%.
Well, that's one of that's an advice. Advice.
But as that example, though, right. And if they're taking out 2 to 4%, that's going to disappear a lot quicker. That's why it's imperative to have it in your own account, so you're not having double the amount taken out.
Well, think about it. If you leave a company and you leave your money in your 401k, a good part of the growth of that 401k, number one, was money that you contributed, which you're no longer contributing, and also money that your employer contributed, which they are no longer contributing. And now you're in assets that are mediocre to begin with and have high fees. So our students, and we talk to you about how you do this. It's very easy to do. You just set up an account with
you mean the transfer is easy to do, but to manage it, you have to learn the skills.
Absolutely, yeah. Let's talk about the transfer first, though. It's just basically setting up a self-directed IRA with a broker of your choice. They basically do the transfer for you. So it really isn't there's not much work involved there. But then the key is to know how to properly manage that. And that's not sitting in front of a computer all the time. We want to keep this simple. Learn how to just set a trade and then turn it off and go out and have some fun. When you're retired, you want to have some fun and enjoy the years that you have left.
That's the key, Al, is having that 3-letter word, That F word, which is fun because that's what we do this for. That's what you want to build your lifestyle accounts, your retirement accounts, to have some fun at retirement. But you can't do that if you got two hands in the cookie jar. So learn the skills, learn them now before you retire or even at retirement to learn the skills to eliminate fees, eliminate that extra hand in the cookie jar. So hopefully you have more longevity with the capital that you do have. And Al, you talk about that in these investing classes. Great, great times learning about 401ks, IRAs, how the markets work within them, but how to eliminate or potentially lower fees. Call 888-682-6466 for an investing class here in Bloomington, or text the word invest to the number 484848. You got to do that right now to receive a quick start kit that has some free stock ideas right for you, our listeners. Coming up next, I feel we haven't got it through enough of retirement strategies. Let's talk more about retirement strategies coming up next with IRAs and 401ks. This is Josh and Al. We will be right back.